Hi, thanks for joining me. I'm Dina Sowers with Real Estate Maximum Performance Realty, and I am joined today by with Alex Moore, and he's with Midland Trust. Hi, Alex.
Hi, Dina. Well, thank you so much for having me. I really appreciate it. Really excited to be here and talk about different investment strategies today.
Yeah. Before we get started, though, for people who don't know, what is Midland Trust? What does your company do?
Yeah, so Midland Trust actually does a few different things. So at its core, Midland Trust is a self-directed IRA custodian, allowing uh, investors to use retirement funds to invest into alternative assets such as real estate. So this is different than a conventional way of investing, typically through stocks and bonds. It allows investors to invest in what they know best, such as purchasing real estate directly.
That sounds good. Let's just jump right in because obviously I'm in real estate and I'm very interested in real estate. I found out about Midland Trust. You're actually just right around the corner for me. I'm super lucky. Your company, though, can help people all over, right?
Yeah, absolutely. So we're headquartered in Fort Myers, Florida, but ultimately we have offices in Chicago and Sioux Falls, South Dakota, and we can help investors across the United States. So even if you're not
Okay.
local, we'll be able to help you out.
That's great to know. Thank you. Okay, so what exactly, how does a person invest in real estate using their IRA money? You always just think of like stocks and bonds and stuff. How do they do that with investing in real estate?
Yeah, yeah, great question. So I think what will be best is to first start in terms of what exactly is a self-directed IRA. And so you'll see on my screen here, this slide. So what is a self-directed IRA? So a self-directed IRA, it's actually not a special type of IRA. So like you were saying, a lot of IRA customers only hold investments such as stocks, bonds, mutual funds, but setting up a self-directed IRA through a custodian such as Midland Trust allows investors to invest in what they know, what they're comfortable investing in, such as real estate. And so a big difference between Midland and a company like Fidelity or Charles Schwab is they don't have the administrative feasibility to make these investments inside an IRA, where that is our focus, that's our target, and that's we are able to give you, the investor, the tools to be able to invest in what you know. A
Great.
lot of yeah, a lot of the IRA accounts, um, a lot of the IRA accounts that are set up, they're funded from previous employer 401k accounts that are just sitting there. So if you have old 401k account, if you have an old 401k account that's just sitting there, you'd be able to roll that over into an IRA and invest into real estate.
That is awesome. I love that idea. Not just because I'm a real estate agent, I actually am working with you guys to do my first investment as well.
Yeah, really exciting. I'm really happy to hear that. It's um, it's a great investment tool for sure.
So do you have oh, sorry, go ahead.
Yeah. So here on this next part, it's real estate IRA benefits. Why would you actually pursue this strategy? So investing into real estate in using a self-directed IRA is actually one of the most popular investment options. Um, and so there's a lot of money in retirement accounts. Uh, the value of IRAs collectively is over $12.5 trillion, and that's
Wow.
only climbing, and only 2% of these accounts are actually uh, investing in real estate, adopting this strategy. And so it's an
That seems
untapped
crazy
market.
low, doesn't it?
Yeah, absolutely.
You're like that tangible asset, right? Invest in real estate. Wow.
A big thing is people don't even know that this is an option. People are comfortable, with their current plans that they have at other uh, conventional institutions, and they don't even understand or have the knowledge that they can pursue this route. So knowledge is power here.
Mm-hmm.
And so doing so, these are investment solutions that you as an investor can control. There's fast turnaround times here at Midland. What happens is we would set you up with a dedicated representative on our real estate team here who would be in contact with you along with the title company or the closer, and we'll be making sure that all the documentation for your IRA account is accounted for so that your IRA is going to be the title holder on the property that's getting purchased.
So
And
do you have to already have something in mind to buy, or can they go ahead and set up an account without
yeah,
having anything yet?
yeah, great question. So there's actually two, so you can do either. If you have a deal in mind that's already taken, that let's say you signed a purchase and sale agreement already for a property, and then you're going to be closing in a few weeks. Let's say you already put down earnest money already. You can open an IRA account here at Midland, and what you can transfer the funds over from Charles Schwab, Fidelity, etc. They go into your Midland account, and what we can do is at closing we can overfund the earnest money deposit, so
Oh,
that the property is being purchased 100% inside the IRA.
oh, that's super convenient.
Yeah. On the other end, if what some people do is they're interested in purchasing property, um, they're in the market to do so, and but they'll maybe they don't have something uh, tangible yet, but they'll open the account, they'll be ready to go, and let's say they open the account, move their funds over to the IRA account. Well, they can send out the earnest money deposit from the IRA account itself, and so they can go that route as well.
Oh, that's great that you can do it either way.
Let's see here. So you can also one major benefit of this is that all the gains from purchasing the property, it grows tax sheltered, and then also all the rental income, sale proceeds, they'll go back into the IRA account tax sheltered as well. So when you own a property in the IRA account, all the rental income, uh, if the property appreciates, you sell the property at a later point in time, it'll all go back into the IRA account tax sheltered. And then if it's in an account such as a Roth IRA, then it would grow tax free.
I like number 9 because that's what I'm doing. Mine's in a Roth, so mine won't be taxed, which is fantastic. And I get to control it, right? Like, I can't control what Apple does, but I can control this. I can control when I have renters and how much I ask for rent and things like that. It makes so much more sense to me because I just don't understand how stocks even really work. I have investments in them, but I don't really understand them. Real estate, I get. It's very clear cut.
Yeah, and that's what's so great, you opening up a self-directed IRA to invest into real estate, this is the industry that you know and are familiar with, and so you're able to, maximize um, what you have in control over.
Right?
All right. So what type of properties qualify? So all types of real estate actually qualify. So single family homes, condominiums, commercial property, multifamily units, land, so improved land, unimproved land, apartment buildings, trust deeds. What some people do, they'll purchase land in an IRA account. So let's say they find some land elsewhere that they want to purchase. What they'll do is buy it in the IRA account, and then let's say they want to own the property or they want to take it out of the IRA at some point in the future. And they can do this with other residential properties as well. So let's say, you're you have an old 401k, or you have a significant amount in an IRA account. Let's say you find a property that ultimately you want to live in, or live on, or land that you want to live on. Well, owning the property in the IRA, while it's an IRA, you're not allowed to directly use the property personally. So it's important to note that it has to be a hands-off approach. So you can't physically use the property or anything like that. However, at a later point in time, if you were to take the property as a distribution, meaning taking the property out of the IRA account into your personal name, then you would be able to use it, and you would pay the tax on the property when you do take it out of the IRA. But that way, you're still in control of the asset. And so some people don't even sell the property; they'll just take it out entirely.
Oh, okay. All right. Um, all of these different types of qualifying real estate, you forgot mine, which is garage condos. I guess it would count under condominiums technically, but garage condos, I just love this concept because the tenants aren't like, they're not going to be doing a lot of wear and tear on a garage. It's just a cinder block structure. So I love this idea that if you're interested in garage condos, contact me.
Yeah, absolutely. So just keeping in mind here some of the important rules. So the IRA account, when you do use the IRA is going to be the title holder. So it's not going to be in your name personally. It's going to be in the name of the IRA, which would be Midland Trust Company as custodian for benefit of, and then it would be your full name and then the account number that's established for you. So that's going to be the actual title holder on the property.
Okay.
So income, we kind of touched on this a little bit. So income and expenses. So all income and expenses related to the property is going to flow through the IRA account. So rent checks will be made payable to the IRA, and then property taxes, utility bills, etc., will be paid from the IRA as well.
Mhm.
No personal use on the property, and it has to be investment purposes only while it's inside the IRA. And then there's no prohibited parties. So this means you can't rent the property out to family.
Oh, okay. That's good to know. The no personal use. How much trouble can they get in?
So you can get in a fair amount of trouble. Um, the IRS actually really, they don't even want you to go on the property at all. When I say like an arm's length distance, I really mean an arm's length distance. If there's anything being done to the property itself, they want to see that you're getting contractors, other vendors performing the services. So they don't want you to be on the property at all. In the event of an audit, there could be some, severe tax consequences as a result.
Right. So don't use it yourself. And don't think that you're going to get around it because it's not worth it. Just use it for investment until you're ready to convert it or sell it.
You got it. So there's three different ways to purchase the property. So you can do the cash purchase, where the IRA purchases 100% of the property. You can also You can also partner your funds with a friend, partner, family member. You can also do yourself. So one thing people do, let's say they don't have enough funds in their IRA, or they don't have enough liquid personal funds outside of a retirement account. You can actually combine the property owner, tenants in common. For example, let's say there was a property that was $100,000, and you had $50,000 in an IRA, $50,000 personal funds. You could purchase the property, tenants in common, 50% with your IRA, 50% with yourself. And then also non-recourse loans would be the third way. And so essentially the IRA would get a non-recourse loan. Um, so the IRA can't personally guarantee the loan. So the property would be used as collateral for the lender. And so it's a little rarer type of loan. There are some, but that would be the route to go
Hmm.
if a loan was needed.
So it's kind of like a mortgage?
Yes,
Okay.
exactly. So we were kind of talking about earlier in terms of how the process is. You can make an offer to purchase the real estate, and then you can notify Midland of the offer um, in to purchase the real estate, and then you close on the property, purchasing your IRA account. Property is owned within your IRA as well. The biggest, most important thing that I would say at this point is that it's the it the IRA has to be established before you close on the property if this is the route you want to go. You can't buy a property and then say, "Oh, I got to move it over to my IRA." You won't be able to do that. It'd be a prohibited transaction.
Hmm.
Um, so sometimes people will try to structure deals where they can buy a property ahead of time and then
Hmm.
deed it over. So you can't buy property from yourself. So that's another
Okay. So
important
you
point to
can't
keep
even convert something you've had for years into this either, right?
in. Exactly.
Okay.
Exactly. So if you have let's say you have an investment property
Mhm.
that in already, you wouldn't be able to throw that in an IRA account or anything like that. So
Okay.
yeah, that should so that's all on the real estate IRA section.
Okay. All right. I had some questions, but I think you already covered most of them. Let me just take a look at my notes
Sure.
real quick. Oh, can you use it if you want to have some sort of business there on that real estate?
If you want to, okay. So you if so you wouldn't be able to, you would not be able to use it. Um, you'd be able to rent it out to other businesses, but if
Okay.
it's something that you're like a majority contributor of, you wouldn't be able to.
Okay. So like my husband's a contractor, so we wouldn't be able to use the unit through his business at all because it's prohibited, right?
Yes,
Okay.
you got it.
All right. I think that's about it. Disclaimer time. It's important to talk to people who know about these things, like Alex. If you want to do a self-directed IRA, it is not for people who don't know what they're doing to just go out and try and do on their own. There might be tax ramifications and some legal issues that you run into. So you really want to use a company like Midland Trust if you're going to do a self-directed real estate transaction. Wouldn't you agree with that?
Yes, it's definitely important to get in touch with someone before you do anything. Before you're interested in actually pursuing a strategy, it's best to give a call over and run through your whole situation, your whole scenario to make sure that there's no hiccups that could occur. Um, so that's the best piece of advice I can say. If it's something you're interested in doing, definitely give us a call. Go through get the information. We'll get the information over to you that you need to know so that we can prepare you for your next real estate purchase.
Sounds good. Thank you. And how can they get a hold of you, Alex? I'm going to put it in the notes as well, but just so, real quick, how can they get a hold of you? What's the best way?
Yeah, so they can call Midland Trust directly. If anyone wants to get a hold of me directly, the best way would be to give me a call. My direct line, it's 239-310-6664. And then my email, it's Amoore, AMOORE info@midlandtrust.com. If you can't get a hold of me, you can also just call us. I can also give you our main line as well. If that.
Sure, I'll put all of it in the notes, and I'll put links to your website as well, so
Okay.
they can get a hold of you. So don't forget to like and subscribe. And if you are interested in 1031 exchanges, we are going to cover that in the next podcast. So make sure you search for that. I'll try and put a link to that one as well. I'm not great at putting links in the videos, but I'll try to put a link to that as well in the video itself. But if not, look down in the comments. I'll definitely have a link to the 1031 exchange podcast, which we will be recording next. So thanks very much for watching, and thanks so much, Alex, for your time. I really appreciate it.
Yeah, thank you so much. Appreciate it.